Good morning to all traders and welcome back to another Market Science video. Stavros Studios here. Today we're going to have a quick look on the indexes. Back to the indices again. We'll start with the US index, then we're going to have a quick look on the S&P, and then we're going to have a quick look also on FTSE. Very interesting developments on the UK. Before we go there though, even though the House of Representatives is expected to vote on Biden's stimulus proposal by the end of this week, so it could be any time, inflation concerns are what keep the markets from adjusting as much. And this is because of real negative yields, in my opinion, because the spread between inflation and real yields is actually quite big. Until we get the stimulus plan or until we get a message from the Fed shows or hints at tapering, investors indeed will remain cautious, but I don't think they will be too worried about the performance or how the equities markets and the indices are going to perform, because we still get monetary and also fiscal conditions supporting the stocks markets. Okay, now we do know that vaccine deployment and also easing of lockdowns are the main market drivers at the moment. So it's very natural that the UK is leading this sort of race, because they've actually vaccinated already more than a quarter of the population, and they're about to announce also easing all restrictions today. If I recall correct, March 8 is going to be the day that schools are going to reopen as well. So it's going to be probably the one leading that race in terms of the economic growth as well. Now, whether optimism is going to affect the currency markets, right, or if there is going to be economic growth, will massively depend on the efficacy, of course, of the vaccinations, right, and whether the Bank of England will have to opt in for negative rates or more QE, or actually neither, because the truth is that if the situation improves and we see that the efficacy of the antidotes works, then in this case the BOE will not have to consider either negative rates or more quantitative easing. So there really has to be a good balance there between all of those elements in order for us to, at least on the macro and fundamental aspect of things, start looking at the medium and longer term. Because at the moment we can only look, and it's wise to look at the shorter term. So with that said, I want to have a quick look on the US index, right? I did expect this to be a correction over here, and I've been actually vocal about that for a while. I mean, it's still not really clear, okay, because we are still trading below the previous low, above, sorry. But I'm thinking that this move on the downside is, it looks like it's going to be an ending diagonal. Why do I think that? First of all, it's not an impulse on the downside, because waves 1 and 4 interact one another. So you could only think that this is going to be a motive wave. So it could be either a leading diagonal or an ending diagonal. If it's going to be a leading diagonal, it means that it's going to be the first. It's going to be the 1, 2, 3, 4, and 5. Yeah, it's going to be the first wave of the ending diagonal. However, that would mean that the extension is going to be huge, like probably 80 or so, which I don't think is going to be the case. So that's why I'm leaning towards that this is an ending diagonal, the beginning of an ending diagonal, okay? Because we had the interaction between these two waves, right? Which is very natural when we're talking about a 3-3-3-3-3 pattern, okay? All corrections. So that said, I'm looking at this as a first move, a B, and I'm waiting for C to see wave 3. Okay, then we're going to get 4 and 5 for a fresh low. Or, as I said before, whether this is going to end up being a leading diagonal, we're going to see in the near future. But for the moment, I'm expecting a break of this low and a continuation down to below 90. Of course, with a successful valid break, maybe we'll get a bounce at 90 before we move lower, which is where maybe also wave A is going to be. We do not know that. And then move lower, okay? Support on the downside is a support in terms of what is supporting the downside buyer view is also MACD in the RSI. The S&P, well, exactly as we expected last week, right? So you see, we're still moving up, okay? No changes here. A, B, and I see A, 1, 2, 3, 4, and 5. The question is whether wave 3 ended here, okay? And we're going for 4, which is going to be, well, it can go even below that. It can go even to 38, 26. It can go even lower than that, you know, to have an ending diagonal here. But I think it's very early to start considering that we only have one wave down and another wave up. So in my opinion, I think we're going to get 1, 2. This is wave 4. We're going to get 5. Okay. So what I'm saying is 1, 2, 3, 4, and 5. So I'm thinking that wave 3 is going to be here. Then we're going to get 4, and then we're going to get 5. Okay. And this is where we can potentially start looking for prices to correct for quite a bit, to be honest, as well. Support from RSI and MACD as well. And last, a quick look on the FTSE. So I'm seeing this as an A, B, C, which is an ABC in wave 4, minor 4. And I'm looking at this as a continuation to the downside, where we're going to get, of course, wave 5. That is going to take us to, if I'm not mistaken, it's around the 5K, right? So this is wave 1 for me. This is wave 2, and then continuation down. However, the other scenario is that we've got a 1, 2, 3, 4, and 5. That is going to be an A. Then we're going to get a B and a C. Or this is a B already, and this is 1, 2, 3, 4. You know, we'll start a new wave on the upside for wave 4, right? Which means this is 1, 2. Yeah, this is a new wave, 1 and 2. 3, 4, and 5. Then we're gonna get 3, then 4 and 5. So that will be all for the day, guys. I hope this video was helpful and is helpful to you. If you have any questions, do not hesitate to comment. If you have any additional count in mind, you know, feel free to post it, and I will get back to you as soon as I can. Thank you for watching, and we'll speak again tomorrow.